Payroll compliance activates the moment you hire your first W-2 employee, and the deadlines do not move because the cost of catching up is asymmetric with the cost of staying current. A payroll service handles the mechanics across the three layers. Your job as the employer is to understand which layer is doing what, set up the three required accounts before the first paycheck runs, and review the payroll reports each pay period. The deadlines are quarterly, annual, and per paycheck. Building the discipline into the structure rather than holding it in your head is the operating move. Three layers all turn on at the same moment: federal, state, and unemployment. Federal covers Form 941 quarterly, Form 940 annually, and new hire reporting within 20 days. State covers income tax withholding registration and remittance. Unemployment covers state SUI registration and remittance and workers' comp activation. A payroll service handles the mechanics across all three for $50 to $150 per month at small employee counts, which sits well below the cost of a single 941 deposit error. Your job is to know what you signed up for and to respect the deadlines that do not move under any circumstance. Form 941 is the quarterly federal filing that reports wages, federal income tax withheld, and the employee plus employer FICA shares to the IRS. The employer's quarterly federal tax return is due the last day of the month after each calendar quarter: April 30th for Q1, July 31st for Q2, October 31st for Q3, January 31st for Q4. The failure to deposit penalty schedule is automatic and aggressive: 2% at 1 to 5 days late, 5% at 6 to 15 days, 10% beyond 15 days, climbing to 15% for amounts unpaid 10 or more days after the first IRS notice. The IRS does not need to discover the late deposit. The math runs on its own from the moment the deposit deadline passes. Form 940 is the annual federal unemployment tax return, and the dollar amount is small, while the filing obligation is absolute. The employer's annual FUTA return is filed by January 31st. The FUTA rate sits at 6% on the first $7,000 of wages per employee, reduced to 0.6% with the state credit in the states that qualify, which is most of them. For one or two employees in a small practice, the dollar amount runs in the low $40 range per employee per year. Small amount. Mandatory filing. Missed Form 940 filings produce penalties out of proportion to the underlying tax. New hire reporting is the third federal layer obligation, and the deadline runs in days rather than months. Federal and state law together require reporting every new hire to the state's new hire registry within 20 days of the hire date, with some states requiring faster turnaround. The reporting feeds into child support enforcement and government program integrity systems and is not optional. Payroll services handle this automatically as part of the standard onboarding flow. You enter the employee's W-4 and personal information once. The service files the new hire report on your behalf within the deadline window, and you are clean on that obligation without any additional work on your end. The state layer adds two registrations that have to be active before the first paycheck runs. State income tax withholding requires registration with the State Department of Revenue or its equivalent, and you withhold state income tax from employee wages and remit on the state's deposit schedule. Module 5.1 covered the registration mechanics. The employee is what triggers the actual activation. State unemployment insurance, SUI, requires registration with the state workforce agency, starting at the new employer rate and adjusting over time based on claims history. The payroll service calculates and remits SUI as part of each payroll cycle. but the registration with the state agency has to be in place before the first paycheck, so the service has an account to remit into. What a payroll service handles across all three layers is the mechanical workload that would otherwise consume hours per pay period and produce error rates a small practice cannot afford. Wage calculation, federal and state tax withholding, payroll tax deposits to both federal and state, Form 941 quarterly filing, Form 940 annual filing, W-2 issuance to employees in January, new hire reporting to the state registry, SUI filing on the state cycle, $50 to $150 per month at small employee counts, below the cost of a single 941 filing error. For one or two employees in a small practice, the payroll service is not a convenience purchase. It is the compliance mechanism. Workers' comp activation is the easy-to-miss step in the hiring sequence, and the new employee is the trigger in almost every state. Module 5.4 covered the registration mechanics at entity formation. If you registered when you formed the entity but deferred activation because you had no employees at the time, the new hire is the moment to activate the workers' comp policy. The activation typically connects the coverage to the actual workforce, premiums calculate against actual payroll, and the absence of active coverage at the moment of the first work-related incident produces severe exposure. Build the workers' comp activation into the same pre-paycheck checklist as the state withholding and SUI registrations. If first hire setup actually compresses to a single onboarding hour once the three tax accounts are sequenced ahead of the first paycheck date. The EIN already exists from entity formation, so the federal piece is just connecting the existing number to the payroll service. The state withholding account and the SUI account get applied for through the payroll service portal in most states. Gusto, Rippling, and ADP all handle the applications inside their onboarding flow. The employee fills out the W-4 and the state equivalent inside the same portal. From there, the service runs the deposits, files the 941 at quarter end, and produces the monthly reports. The owner's recurring work is the monthly report review, not the payroll mechanics. Three accounts have to be active before the first paycheck runs, and the registrations themselves can take days to weeks depending on the state. Federal, your EIN is already your federal employer account from entity formation in Module 4. State withholding, registered with the State Department of Revenue. State SUI, registered with the State Workforce Agency. Do not run the first paycheck without all three in place, because the state agencies operate on their own timelines, and an unregistered account when the first paycheck runs creates compliance exposure from day one. The hiring setup checklist names every account and form in the correct order, so the onboarding is mechanical rather than improvised.